Now, sidebar to this whole thing with David Jones was the issue of continuous disclosure. It went into a trading halt a couple of days before the announcement, around the time that ASIC was making the headlines with a crackdown on companies not making price-sensitive announcements in a timely manner. The big Constructor Leighton Holdings was Exhibit A for the prosecution and was fined $300,000, had a few other orders imposed on it over alleged disclosure breaches of a big write-down last year. So here's ASIC Chairman Greg Metcalfe.
If you come out and make claims to shareholders and you don't come through and deliver the goods, they're going to make you pay. So I think commercially, there's a commercial consideration there before even a regulatory one, which is if you want to have the trust and confidence of your shareholders, you should be very careful in making profit forecasts.
I suppose what he's talking about is the potential for class actions, isn't it?
I think, and there's a big difference between companies outright lying about what's happening and those that don't release the information the day they get it, because there's plenty of other information that needs to be gathered up to make an informed decision on the impact of these events on profits. So I think we're getting into and investing in shares is you're taking on the risk that things will change. If you get bad news, you'll lose money. No one calls you the day before it happens. So I think continuous disclosure is good in theory, but it doesn't stop share prices moving up and down on reality of risk eventuating.
I'm a bit surprised though that David Jones, when being a retailer, they would have known from pretty much after the sales had finished in mid to late January, they would have known back then that they were in trouble, that there was nothing that was going to happen in February and March that was going to change the profit outlook. So I would have thought some sort of guidance or profit warning a lot earlier than what happened would have been appropriate.
Well, they had a bit of a panic, didn't they?
Oh, they did.
A trading halt for 2 days. I mean, it'll be a complete mess if companies, every time they make a profit announcement, go into a trading halt for 2 days.
Well, it could be happening more often because ASIC Chairman Greg Metcalfe has been going around essentially saying he's going to use those sort of traffic warnings more often. Remember, ASIC's going to have $8 million cut from its budget this year, and it doesn't, can't afford those big those big legal cases anymore. Half the time, it hasn't been doing so well in them. So I think you're going to see a lot more vigilance and sort of waving the big stick, and we're going to possibly see more of that type of overreaction or the sort of trading halt sort of situation that we saw at David Jones this week.
I think you're an investor in Slater and Gordon, aren't you, Ed? So you'll probably be happy to see lots of class actions.
We will and they will.
That's right.
Absolutely, yeah.
But what they're saying is, though, the days of slipping out a so-called market update during lunchtime or late on Friday afternoon when they hope that no one will notice it, that is almost certainly gone. But, a trading halt only draws attention to the potential bad news, and that's what we saw with David Jones.
But if continuous disclosure actually worked properly, there shouldn't be any surprises.
I know, but if there were no surprises in the world, there'd be no market. Share prices wouldn't move up and down, and as we know, they do.
So it's inherently problematic, isn't it?
What ASIC is trying to fix cannot be fixed. I mean, you can tinker at the edges, but fundamentally, markets are full of surprises. If they weren't, they wouldn't be so interesting.
Well, but I think it's good that companies are going to be more vigilant about releasing information, when they get it. And, the David Jones reaction to what happened with Leighton's is a case in that. But I'm wondering what happens with you when you go out to see all your small caps. They must tell you interesting stuff all the time. How do you sort of deal with that?
They do, and you've got to be careful when you know that you've got information that sort of strays into the non-public information. Then that's something that precludes you from trading. But in most cases, I think the cowboy days are largely over. There's probably a small portion of the market that tells you too much, but most CEOs have been very, very well schooled in how to communicate with people.
I presume
like
you'd
us.
rather not know, would you, Ed?
And exactly.
Because that means you can't go into the market.
Exactly. Once we know, our hands are tied.